AMD just gave Wall Street the AI proof it was waiting for, but this quarter also raised the bar for everything that comes next. This was not just an earnings beat. Revenue, EPS, data center growth, free cash flow, and guidance all moved in the right direction. The real question now is whether AMD can keep scaling fast enough to justify the AI premium. That is the tension in this print. The numbers were strong enough to make the AI story harder to dismiss, but they were also strong enough to raise investor expectations. So the takeaway is not just AMD beat. The takeaway is AI growth is real, data center is now the engine, and the execution bar just moved higher. Here's the scoreboard, without making this sound like a spreadsheet. Revenue came in at about $10.3 billion, up 38%. GAAP EPS was 84 cents. Adjusted EPS was $1.37. Data center revenue was about $5.8 billion, up 57%. Free cash flow came in around $2.6 billion. And guidance pointed to about $11.2 billion in Q2 revenue. That is the part investors care about. The quarter was not carried by one flashy number. Revenue, earnings, data center, cash flow, and guidance all moved in the right direction. That is what changed the thesis. This is where the story changed. Data center revenue was about $5.8 billion. That is now over half of AMD's business. This is not just a PC and gaming recovery story anymore. This is becoming an AI infrastructure scale story. EPYC and Instinct matter together, because hyperscalers are not just buying a chip, they are underwriting a platform. They want more supply, more leverage, and more architecture diversity. Data center is now the engine. The question is whether AMD can keep scaling it without losing margin discipline. This is where the AMD versus Nvidia debate needs better framing. AMD does not need to beat Nvidia to win. Nvidia is still the standard setter. Nvidia has the ecosystem lead, the software advantage, and the default position in AI accelerators. AMD does not have to pretend that is not true. The more investable question is whether AMD can become the credible second-source AI infrastructure platform for hyperscalers. That means AMD does not need to be the first call for every AI workload. It needs to be the trusted alternative. It needs to give hyperscalers supply diversity. It needs to give them negotiating leverage. It needs to give them architecture diversity. And it needs to prove that the software experience, system roadmap, and supply chain can support real production scale. That is the opportunity. If AMD becomes the clear number 2 AI chip platform, the company can win without replacing Nvidia as the leader. But that also means the execution standard is high. Second source does not mean second class. Comment below. Can AMD become the clear number 2 AI chip platform behind Nvidia? Free cash flow was the quiet star of the quarter. It came in around $2.6 billion. That matters because AI demand turning into revenue is good. AI demand turning into earnings is better. But AI demand turning into cash is the quality signal. Revenue is the front-end gross. Cash flow is the deal jacket. This quarter, AMD passed the cash conversion test. The balance sheet also gives AMD room to execute. Cash was about $12.3 billion, against about $3.2 billion of debt. That does not remove risk, but it gives the company flexibility. This was not a flawless report, and investors should not confuse a strong quarter with a risk-free stock. The first risk is expectations. When a stock earns an AI premium, the market starts demanding clean execution. Second, margins still matter. Q1 non-GAAP gross margin was 55%, and Q2 non-GAAP gross margin is guided around 56%. Third, Nvidia still has the software and ecosystem advantage. Fourth, AMD still needs to execute on MI450 and Helios. Fifth, HBM and advanced packaging supply remain critical. Sixth, inventory needs monitoring, because semiconductors are still cyclical. Here is the investor framework. The bull case is that AMD becomes the clear number 2 AI infrastructure platform behind Nvidia. The base case is that AMD is a real AI beneficiary, but the stock may need pullbacks or consolidation for cleaner risk reward. The bear case is that AI demand is real. but expectations are pricing in too much too quickly. If margins disappoint, supply becomes constrained, software adoption lags, or the semiconductor cycle turns, the stock can still get punished even after a good quarter. AMD delivered the quarter it needed. AI growth is now showing up in the financials. Revenue was up 38%. Data center was up 57%. Free cash flow was around $2.6 billion. And guidance pointed to continued scale. That is a great quarter, but it also raises the bar. The next test is execution. Margins, supply, software, and data center scale. That is the bottom line. Strong quarter. Bigger opportunity. Higher execution bar. If you want more AI-powered earnings breakdowns like this, subscribe to Apex Wealth AI and grab the free AI Investors Toolkit linked below. Drop a comment. Are you buying AMD after this print, holding, or waiting for a pullback? This content is for informational and educational purposes only. It is not financial advice, investment advice, or a recommendation to buy or sell any security.